Alright, good morning. Let's go over today's trade plan. So off the non-farm payroll number, we got to push into the 85.75 to 87.75 resistance, where responsive sellers were active, and we ended up seeing about a 10-point pullback from there. So at this point, we're going to be using 77 to 79 as the micro bull bear zone to establish our directional bias. If we can hold above it, it would tell us that the buy side is still in control, and we can get a retest of the 85.75 to 87.75 initial resistance zone. In the other markets, we do want to see some continued strength. So far, they have been lagging. ES tested 85.75, pushed above yesterday's high, but NQ and TF so far have failed to break above their prior session's high. So we are still seeing that relative weakness in those markets. And in order for ES to really climb higher and continue pushing through 85.75, we do want to see NQ trading above 36.12 and TF trading above 31 to 32.5. So those are the key levels in NQ that we want to see taken out today. On the downside, ideally we want to see TF holding at the very minimum the 11.24 area, and in NQ we want to see it trading above at the very minimum 35.93. On the downside, below 77 to 79, we have support at 70.5 to 72.5. So below 77, it tells us there's a little bit of short-term weakness in this market, but it doesn't necessarily put sellers in outright control. Above 70.5 to 72.5, the buy side can still maintain control and balance in a range. A break below initial support, though, would be a red flag for buyers. It would bring the 65 area into play. And at 65, we can expect responsive buyers to be active on first test. But then if that level goes, that would be a bigger picture shift and could result in a long liquidation and a sell-off below 65. So that's kind of the last spot for buyers, bigger picture. But short term, even holding below 77 to 79 would be a sign of short-term weakness in this market. But until then, as long as the other markets are holding up, so far we've seen a retracement in the other markets, and they've come down and tested their breakout area for the non-farm payroll move. So they retrace pretty much 100%. But unless they actually start breaking below that area and breaking the overnight lows, the buyers can still maintain control, and the markets can simply balance and slowly start balancing at higher prices. So we can't really go bearish too soon in this market because the market's been really resilient. The short side hasn't really been playing out on the larger time frames. Short term, of course, you can find short setups off the resistance zones, and they've been providing pretty decent rotations. But bigger picture, we've still been establishing value higher, and slowly we are balancing at higher prices. So eventually that can lead to a test of the all-time high at 92.5. It doesn't have to happen today, but right now, if the other markets start catching up, then the market, ES would be setting up for a test of the all-time high. So 77 to 79, micro bull bear, bias is bullish above that zone. I'd expect a retest of 85.75, hold below it. Got to be a bit more cautious on the long side then. 70.5 to 72.5 is a very key spot, and expecting responsive buyers there as well. And as long as that zone can hold and the other markets hold up, the overall bullish structure in the S&P can remain intact. Aside from that, we have to keep in mind that the S&P is a bit overextended. The other markets have some room to catch up, whereas S&P has already kind of made the upside move. So there could be limited potential here in the S&P. Like, it might just get to initial resistance again and then just kind of stall out, or just balance in a range at some of these higher prices. So we're going to be keeping an eye on NQ, TF. Again, that 11.23 to 11.24 area in TF, important short term. 35.93, important short term in NQ. As long as we can hold above it, we can slowly balance out and then move higher. If those areas start breaking and we start seeing some sell-off in NQ and TF, then ES would be overextended to the upside, which it is already, and you can put in a catch-up move to the downside and shoot for those 65s. So those are really the main ideas Again, we don't want to go bearish in ES too soon. It is the stronger market, but once we start seeing some signs, if the other markets start pulling back and showing a lot of weakness, then we can shift our focus to the short side. For now, at these prices, at the micro bull bear initial support, the long side makes more sense, so we'll stick with that idea. So those are the main thoughts for today. Let's see how well the buy side can hold it up this morning, and we'll take it from there.